$1 billion. Let that number just kind of sink in for a second. In the world of enterprise technology, $1 billion isn't just some nice milestone to hit. It's a massive, undeniable validation of a product's absolute necessity in the market.
And this isn't just a valuation or some pie-in-the-sky projection. ServiceNow's AI products have officially crossed $1 billion in annual contract value as of Q2 2026. While the rest of the tech world is busy running pilot programs and merely experimenting with artificial intelligence, ServiceNow is out there actively and massively monetizing it. They've literally turned the promise of AI into cold, hard, recurring revenue. So welcome to The Explainer, everyone. I am absolutely thrilled you're here. Today, we are taking a super dense 9-page financial earnings release and transforming it into a clear, compelling business case. We're going to uncover exactly how ServiceNow isn't just selling software anymore. They are delivering actual, quantifiable ROI on artificial intelligence. Here is our quick roadmap for today. First, Q2 2026 blockbuster results. Second, delivering AI's true ROI. Third, the autonomous workforce. Fourth, strategic powerhouse partnerships. And finally, we'll wrap up with the Rule of 60. All right, kicking things off with Section 1, Q2 2026 blockbuster results. To really set the stage here, CEO Bill McDermott made a seriously bold claim in this earnings report. He stated that these exceptional Q2 results solidify their position as the fastest-growing major enterprise software and cybersecurity company in the world. Now, that is not a statement you just throw around lightly on an earnings call, right? You'd better have the numbers to back it up. And wow, do they have the numbers? For the second quarter of 2026, their subscription revenues hit a staggering $3.877 billion. They didn't just meet Wall Street's expectations, they completely beat the high end of their guidance across all Q2 top-line growth and profitability metrics. Now, context is absolutely everything when we're talking about a revenue figure this huge. This actually represents a 24.5% year-over-year growth. For a company of this sheer size to be growing by a quarter of its revenue base year-over-year, it's phenomenal. It proves they aren't just big, they're actively accelerating. But honestly, the most critical number for their future trajectory might actually be this one, $29 billion. This represents their total remaining performance obligations, or RPO. Basically, this is money that's locked under contract but hasn't been officially recognized as revenue yet. This $29 billion figure is growing at 21% year over year, which tells us that customers are making much longer, much larger commitments. Future demand is just skyrocketing. Which flows perfectly into Section 2, delivering AI's true ROI. The crucial thing to understand right now is the current state of enterprise tech. Out in the broader market, most companies are spending absolute fortunes on compute power and language models, desperately searching for actual business value. But ServiceNow isn't searching. They are delivering. They have figured out how to make AI directly impact the bottom line. CFO Gina Mastantuono summed this up perfectly in what I like to call a total mic drop moment. She said, in an environment where most enterprises are still searching for AI's ROI, ServiceNow is the platform delivering it. And she backed that up by pointing out that their AI net new annual contract value is completely outpacing their own internal expectations. It is literally the engine pulling the whole train forward right now. Moving right along to Section 3, the autonomous workforce. We are talking about an absolute avalanche of new AI innovations here, a lot of which were actually showcased at their Knowledge 2026 event. This is an entirely new ecosystem. They launched ServiceNow Auto, they expanded their AI control tower, they introduced autonomous AI specialists for different departments, and they released Build Agent for developers, which integrates directly with popular coding tools like Cursor and GitHub Copilot. So they aren't just giving you a simple chatbot, they are giving you a fully autonomous workforce. Let's zoom in on Auto for a second. That's their new unified AI experience, so you can really grasp their unique approach. Step 1, Auto actually understands the user's intent. Step 2, it intelligently routes that work to the exact right human or AI agent. And step 3, and guys, this is the vital part, it executes the tasks to completion entirely within strict enterprise guardrails. This is not some rogue AI hallucinating company data. It is governed, it's secure, and it's fully compliant. But they also realize they don't operate in a vacuum. With their brand new action fabric, they are basically letting third-party AI models play in their sandbox securely.
Anthropic became their very first design partner for this, meaning the highly capable Claude AI model can now securely take direct action inside of ServiceNow workflows. They are systematically making their platform the central nervous system for all enterprise AI.
Which brings us to Section 4, Strategic Powerhouse Partnerships.
Just think about the sheer scale of this roster for a minute. They aren't doing this alone. With NVIDIA, they are extending AI governance all the way from desktop computers down to the data centers using Project Arc. With Microsoft, they're weaving their AI control tower directly into the Microsoft Agent 365 ecosystem. And with Experian, they are bringing high-level financial intelligence and decisioning capabilities right into ServiceNow workflows. They are essentially wrapping their arms around the entire digital enterprise landscape.
And the financial payoff for these partnerships is literally off the charts. Just get a load of this milestone. ServiceNow has now surpassed $1 billion in AWS Marketplace transactions alone. By collaborating so closely with Amazon Web Services, they are giving customers a unified architecture, making it incredibly easy to just buy and deploy ServiceNow at a massive, massive scale. All right, let's bring it all home with Section 5, the Rule of 60.
So, circling back to CEO Bill McDermott, he stated, "The company's sterling fundamentals have us operating to the Rule of 56, well on our way to the Rule of 60. Now, if you follow SaaS companies, you've probably heard of the Rule of 40, right? That's the benchmark for a healthy software company. Operating at a Rule of 56 is exceptionally rare. So let's translate that Wall Street jargon into plain English so you can really take this away with you. The Rule of 60 means that when you add their subscription revenue growth rate together with their free cash flow margin, that combined number exceeds 60%. It is an incredibly elite metric. It proves that a company is not only growing at breakneck speed, but is also generating massive, highly profitable cash flow while doing it. And get this, their target is to hit this 60-plus mark consistently by 2030. And they are already tweaking their short-term trajectory upward to get there. They've officially raised their full-year guidance, estimating Q3 subscription revenues to jump to nearly $4 billion, specifically between $3.975 and $3.980 billion. This upward revision is heavily driven by that net new AI contract outperformance we talked about, combined with incredibly strong demand from the U.S. federal government. Which leaves us with one absolutely wild final thought. In this earnings report, they revealed that agentic deployments of ServiceNow AI increased ninefold, that is 900%, in just the last 9 months alone. So my question to you is this. If they are already crossing $1 billion in AI revenue today, what exactly is the global enterprise landscape gonna look like when they finally hit that coveted Rule of 60? It is a fascinating shift to watch. Thank you so much for joining me for this explainer, and I'll catch you next time.